anything. I was like, this topic is up because at this point, people that call ourselves accountants, the accounting is no longer adding up.
Hey, the dollar rate is not smiling at all.
I saw somewhere that if you go and buy something and the vendor their phone ring, don't allow them to pick the color. If not, they will increase the price.
Imagine.
So how can we plan in all of these crises? It's crazy because it's looking like we're basically doing what do you call it now? We're basically doing a competition of highest price. Everybody's just shooting up their prices.
Honestly, the thing is really affecting we business owner now, because you give a quote to a customer and maybe the customer is not ready, and later when he's about to pay for the goods, you end up hearing that the price has increased. It makes the customer pause it and decide not to do it again sef. That's just it.
Okay, so I know that one will argue that are they not seeing what's on the news? But the truth is the resources are not readily available. Yeah. So with regards to that, what I would advise, even before all of these crises, when you are giving quotation, you should always have an adequate buffer, especially knowing that the prices these days are really very crazy. You understand? And even when the buffer, obviously you don't want to overshoot your buffer because you are trying to make a sale. You should also put terms and conditions. So okay, if payment is not made within a certain period of time, the prices here are tentative. They can change at any moment. And trust me, nobody will blame you. So let's get started and see what we can do. Okay. So our topic for today is understanding your, what's it called now? Understanding your financial planning for business growth. So like I said before, my name is Ekoromena Ujiri. I am the managing partner for Accounts and Data. So Accounts and Data is basically a business consulting firm where we help business owners make sense of their financials. So we help with accounting setup, taxes, auditing, and general advisory for businesses. So that's that. Now, what is financial planning? I know you must have heard somewhere that he who fails to plan plans to fail. It's a very popular saying when we're growing up. You just have to plan, you have to plan, you have to plan.
Yes.
Now, but when it comes to your business, yeah, what financial planning do you actually need? Understand? So basically, we know that people enter business for one purpose and one purpose only, to basically provide value and earn a living, not make profit out of it. Yeah. I'm a profit-oriented guy. If the numbers are not making sense to me, I know I will not get something out of the day. I know they put my hand inside. You know, that kind of a thing. So we want to be able to plan so that whatever we are doing, yeah, we want to be able to plan so that whatever we are doing, we do not end up wasting our time. So if we don't plan, if we don't in some form of way know that, okay, this thing we're about to do is going to yield us profits, then I don't think we should go into it in the first place. Now, like my brother had mentioned, that said, for people that probably do jobs based on contract, you give a customer quotation and they say, okay, I will get back to you. By the time they get back to you, you yourself say, okay, prices don't go up. Now you've not carried out the project, but somewhere in your head, because you have planned, you know what it takes to carry out that project. Yeah, you know that it will be a waste of your time to involve yourself in doing that business. And it's simply a waste of your time because you'll be making a loss. Now, if you had not made any plans, if you have not written anything, that you've not done anything, yeah, you cannot make such decisions. I don't know if you get me. So basically, that is why we need to plan so that our finances will start to make sense. Business and finances, we're not talking personal one today. Okay? So now, what is financial planning again? Financial planning is the use of historical data to predict the future. Going back to my Oga's example again, yeah, that whatever job you probably are doing, so let's say you are given a job to probably make furniture or build a house. Because you've done it or somebody has done it, you can come up with an estimate. Yeah, that is historical data. Something similar that you've done or somebody has done, you probably do a research. Okay, ask questions. What does it cost? How many bags of cement do I need? Okay, let's say for instance, I need 500 blocks. How many bags of cement do I need to? How many bags of cement do I need to make? How many bags of cement do I need to make 500 blocks? You understand? So, what is the price of the cement? I guess it's 15,000 now, but they are saying they want to take it back to 7,000 naira. So, whichever the case, that is how you want to be able to use historical data because somebody has made 500 blocks before. Yeah, so they have enough data. Okay, for you to be able to carry out this project, this is the amount of materials, tools, or whatever it is, yeah, that you need to carry out a project. It could be maybe a retail business. So you say, this year I want to make 1 million naira in profit. I want to make 10 million naira in profit. I want to make 50 million naira in profit. What do I need to put in place to be able to make that money? So those are the things we're basically going to be talking about today. Yeah, you be able to take advantage of historical data to predict the future of your business. Now, why do we need financial planning? Okay, one of the first reasons why we need financial planning is for strategic decision making. It's like I'm going to be using this Malgas example a lot too. Back to his example again. Now, if he had not planned or had a budget in mind or had something in mind to refer to, he would have known if to take on that job with that same price or not. There would be no information to make decisions with. Yeah? So that is one of the reasons why you actually need financial planning. You need financial planning because it helps you make decisive decisions. Can I get an hallelujah? Okay, so you need to plan your business. You need financial planning so that you can decide how to price your products. You can decide what expenses to make and what expenses to forgo. You can decide the kind of area you want to rent your apartment, how much your rent should cost you, because you have made a plan for it. Now, if you don't, it's like saying you want to go somewhere, but you don't have an address. Yeah, not making a plan. It's very similar to that. You want to get to Benin, but you don't have directions. You don't know your way. You probably would never get there. Now, what financial planning does is help you make those strategic decisions on a day-to-day basis, so you don't run your business blindly. Yeah, so you don't run your business blindly. Then the next thing is risk mitigation. Why do you need financial planning? You want to be able to mitigate the risk coming into your business. So what risk are we going to be talking about? Yeah. So there are various financial risks. It could be risk of you not be able to pay off debt loans that you borrow. It could be risk of running at a loss. Whatever thing you do, everything in your business is basically a risk. Even the life that we live on a day-to-day basis, there are risks everywhere. Yeah, there are risk of you probably buying goods that you cannot sell. So you want to be able to plan what are your contingencies. Without a financial plan, you probably will not even know the units to buy. So let's say on a normal day, you sell 100 pieces of an item, and just because you have money, you want to go and buy 1,000 of them. Now there's risk that you probably might not sell those items, or you take too long for you to sell, and you tying your money down. You probably will not get value for that money. So why would you be buying 1,000 pieces when you just need 100 for that period of time? Yeah. So those are the kind of things that you need your financial planning for. You'll be able to know, okay, this is my what's it called now? My turnover cycle. Yeah. This is the period of time it will take for me to turn over these goods or service. Yeah. Another reason why you need financial planning is resource allocation. Yeah. So just like the federal government, that when they do their yearly allocations and budgets, even your business needs something similar. The truth is, if you notice, yeah, I tell people that sometimes the reason why they probably spend money anyhow is because they do not have a financial planning for them. So I know most of you are probably have experienced something similar where you are expecting a huge sum of money, and you say, okay, when I get this money, I will get a machine. I will get like maybe a machine for your business. I would get a new phone, get whatever it is that you probably have been looking forward to get. But this money comes, and a few weeks or months down the line, the money has gone. And maybe out of the 10 things you are looking to buy, you probably just got to the 3. That is because you had no concrete plan. Yeah, especially when the money didn't come all at once. You had no concrete plan on how to spend this money. So that is what financial planning helps you do. It helps you plan. You have a foresight of how your money is going to come and how you're going to spend it. Yeah. So those are the things we're hoping to make you understand tonight. How to allocate the resources coming into your business. Then another thing we're going to be looking at tonight is, another thing why you need financial planning is for performance evaluation. Yeah. So they say you cannot grow anything in this life. You can't grow anything that you do not measure. Yeah. So let's say you, like we said, you let's say for instance you're hoping to make 10 million naira. Yeah. And at the end of the month, you probably made 8 million naira. If you had no targets to begin with, you wouldn't know if you met your profit goals or not. There would be no push. Like even psychologically, you won't have a push to probably do more. Especially maybe you have a poor sales during the day. You won't have that psychological push in the first place. Yeah. So if you do not have these financial plans, then there's nothing for you to evaluate your performance with. That is one of the reasons why you need financial planning. Yeah. Then the last on my list is investment funding and cash flow. Oh, there's an error there. That's supposed to be cash flow and cash flow. Now, another great reason why you need financial planning is to be able to understand your cash flow. Yeah. So let's say you are into the supply business, for example, and the supply business that you're into a supply business and you probably sell on credit. Yeah, you probably sell on credit. So, but okay, let's say, sorry, I'm trying to catch my train of thought.
I understand. Yes.
Yeah. Okay. So let's say you're in supply business, yeah, and especially when you are maybe how would I put it now? You offer credit facilities. So, like most supermarkets here in Lagos, I can supply you something, and you give me maybe you say, okay, give me 14 days or give me 7 days. I'll pay you for your items in 7 days or in 14 days. Now, if you don't have financial planning in place, especially maybe if you were paying for all of these things in cash or even in credit, whichever way it is, you don't have financial planning in place, you might not be able to meet up with demand and supply. Because some way, if you don't have cash ready available to probably pay people you are supplying for, paying people you are buying from to make your supplies, yeah, you will get stuck along the way. So these are things you probably need financial planning for. You want to say, okay, what is the normal purchase order level that they give to me for me to go and supply and all of those things. You want to have all of these plans in place so that you can make good decisions on a day-to-day basis in your business. Also investment. So let's say you are looking for loan from even a family member, the bank or whatever the case may be. One thing they would probably want to see is the ability for your business, not just the profit. Yeah, you can be making profit, but most of your money can be tied in debt. So they want to see what cash, how much cash do you have available per time? The ability for your business to pay back their loans. Yeah, so those are the things they are looking at for on a day-to-day basis in the business.
Okay, we can see the slide now.
Yeah.
Okay, that's okay.
So what is this financial planning process we are making all the fuse about, we're talking about? What is this financial planning process? Yeah, so I'm trying to go straight to the point and not buzz with plenty English and grammar. Yeah, so the financial planning process simply comes down to budgeting and forecasting. This is the use of historical data, that's budget, to predict future occurrence, which is the forecast. Please note that there is no way to actually tell the future. However, this allows us to hedge against it. So as you can see, if anybody had told me that by today a dollar will be 1,800, there's no way I can plan for a dollar being 1,800. So that is what the future holds. There are a lot of uncertainties, yeah, but as a good financial person, you probably want to make plans and adjust as shit happens, yeah, for lack of a better word. You probably want to make plans and adjust as shit happens. So the worst part is when you don't have any plan at all. So for instance, now you probably are doing importation, and when dollar was 1,500 naira, you were doing your planning and costing, you decided to put the things on the same 1,500 naira. It will not work. It simply means that before they will even get to Nigeria, you probably are running at a loss. So if you are good at financial planning, you probably say, okay, what's got to worse? Let me put a dollar at 1,008, 1,009, or even 2,000 naira, so that no matter what, which I call like the buffer, like I mentioned earlier, which is just a little allowance on the actual cost of your items or the goods that you're trying to sell. Yeah. So all of these allows you to probably hedge against any future risk that might take place if things go haywire. If dollar falls, more profit to you. If it does not fall, and it goes up, you know that, okay, your loss will not be as much as it would if there were no plan in place to hedge against all of those risks. Yeah. So basically, you want to be able to look at what's is it your sales pattern, which is your historical data? Is it your sales pattern? Is it your cost pattern? You want to be able to look at all of those to make your buying and your selling decisions, your expense decisions. So that's simply making a budget, yeah, like using your historical data to make future plans, like predict the future. Okay, if I buy this today, I can sell for this today and still come at a reasonable profit. Yeah. So that is basically the financial planning process. So how do we make, I didn't change this thing. How do we make the financial budget, or should I say financial plan? These highlights are actually wrong. So I'll just take the next slide and start explaining from there. So first things you want to do, you want to determine your sales pattern. So all of this topic was supposed to be here. I will change this if I'm to send you this thing accordingly. So the first thing you're meant to do is determine your sales pattern and quantity. Yeah, You want to be able to determine your sales pattern and quantity. So what do I mean by determining your sales pattern and quantity? Like I've been saying before, especially when you're trying to plan to make a profit. Like I said, I'm very profit oriented. Yeah. If the business is not making me profit, I really am not interested. At least that is why they even pay us accountants. We want to be able to know, okay, are we making profit? What can we do to make profit? Yeah. So you want to be able to determine your sales pattern and quantity. So that's the first thing you want to do. So according to my steps here, first you want to have the name of the items. Yeah. So let's say you want to make a financial plan for a typical fashion business where they sell shoes, bag, and jewelry. So for this example, we're assuming that, okay, they have one shoe, or probably all their shoes cost the same amount of money, bag and jewelry. We're just doing examples. So you want to name the items. It could be goods, it could be services that you sell for your business. Now, and the next thing you want to determine is the frequency at which you sell. So let's say in your business, typically for a month, yeah, okay, let's say in your business, typically every day you make at least 15 sales. Yeah, 15 sales. Okay, sorry, let me take it again. So typically for frequency, you want to in the accounting world, we try to group revenue, sales, events on a period of time that is reasonable. This is because we don't believe that you can actually tell if you're making a profit or a loss on a daily basis. There can be some days that all you do is expenses. There can be some days that all you do is sales and you don't spend any money. So we try to say, okay, over a period of time, which is usually monthly, I think it's a universal thing. People try to look at their profits in monthly, quarterly, and annual basis. So if we're doing the shortest possible time, which is monthly, we want to say, okay, we have frequency for monthly, which is 30 days, roughly 30 days. We have for weekly, which is for 4 weeks, and we have for monthly, yeah, which is 1. Now, I want to say, for instance, you own a fashion shop. I know the numbers can get confusing, but stay with me. And you sell 15 units of fashion of shoes every day. So if you multiply 15 times 30, you have 450 total. So this simply means that in a month, you're looking to sell 450 pairs of shoes. That is your estimate. Yeah. So these are questions that you have to ask yourself when you're trying to make a budget. That, okay, I want to sell and make a profit. I have shoes, I have bags, I have jewelries. How do I sell all these things? All of these things. What is the frequency at which I sell all of these items? So for my shoe, I would say I sell 15 shoes. That's my best moving item. I sell shoes every day, and every day I sell at least 15 shoes. Yeah, by the time I add my Facebook ads and all of that, I sell at least 15 shoes. Now, how many days are there in a month? Yeah, there are 30 days. So by the time you multiply 30 times 15, you get 450 units. So that's the amount of shoes you are looking to sell in the month. Then there are certain things that you don't sell every day. But at the end of the week, you will just sell. And you're looking at, okay, at the end of the week, I will sell at least 5 units. Yeah. So if you are trying to make a monthly budget for that one as well, you multiply the 5 by 4. Yeah. So you get 20 total for the month. Then let's say you have expensive jewelry. You don't sell them as frequently as much. Yeah. So I'm just giving you this different scenarios so that you can. I know that not everybody is into daily sales. So your sales can be coming in monthly, your sales can be coming in weekly, your sales can be coming in daily. So you know how to estimate for whichever scenario or category you fall into. If you are even in real estate, maybe you sell quarterly or you sell annually, that all you are just looking for is one sale and you don't blow. If you are that kind of person, no wahala, just put one and do your estimate on an annual basis. Yeah. So basically that's that. So we say, okay, you sell at least 2 items in a month. Yeah. If you sell at least 2 items a month, the frequency, this is supposed to be 1 jewelry. Don't know how I made that mistake. So 2 times 1 should be 2. I think I should just, where is my, sometimes when you are overconfident that you know what you are doing, that's how you make all these kind of mistakes. Let me open the raw data. You're laughing. Hey. Coming. I want to open the raw data so that I can make these adjustments as I'm seeing there, because it's not making sense again.
Sir, but while you're
Am I here? I'm looking for Voila. Okay.
Sir, while you're making the adjustment, I want to ask, for persons into service-based business, and they can't calculate shoes, bags, jewelry, how do they do this aspect of calculation?
So, like I said, it is basically the same thing. Yeah, personally, I'm into service business. So let's say I want to put out my 3 major services here. So for shoes, let's say I have my bookkeeping service. For the bags, let's say I have my auditing service. Then for the jewelry, I have my tax consultation service. Now, what do I do? I'll not say for bookkeeping. Bookkeeping is where I help businesses, keep records, their financial records, their day-to-day financial records, and that one itself is on a routine basis. So if I want to do an estimate of how many, so I will not say, okay, I have 10 clients, or I'm looking to get 10 new clients. Yeah, you understand? So 10 new clients are not come in on the unit basis. So the next question is, okay, what is the period of time that I want to get these 10 new clients? Do I want to do it on a monthly basis, or should I say I want to get 10 new clients on a weekly basis? It's not realistic for me to get 10 new clients on a realistic basis. But on a monthly basis, if I do ads and all of that, I can get 10 new clients. I don't know if you get what I'm saying. Yeah?
Yes, I do.
So
yes,
I put the frequency monthly. I say one, then amount of units I want to sell, which is 10, and I multiply it and I get 10 total. Yeah. So for tax consultation, let's just say I want to do. I'm running a program where I do clarity calls. I can have at least two or three clarity calls per day, but in budgeting or in accounting, we try to be conservative. So if I want to do clarity calls, I can say, okay, how about doing 2 clarity calls every day? Yeah, 2 clarity calls every day. So what I do is for the units, so that for where you have the shoes, I can put in the place of units, I can put 2. Then I put what's it called? I put the 2 times 30, which gives me 60. So my total task consultation calls I'm looking to make within the period of 1 month would be 60. Yeah. So that's how you want to be able to make budget. Yeah. Therefore, which is the last one? Audit. Yeah, audit engagement. Audit probably the number. Let's just assume you do it for 1 week, but usually takes more than 1 week. Yeah. You can say, okay, you want to have 1 client for each week. You want to be able to finish a client's job, audit job for 1 week. Yeah. And you multiply 1 by 4 and you get 4. So that is how you cannot determine what your sales pattern is. Yeah.
okay.
The next one we'll talk about how we're going to be using those sales patterns. So I'm coming. Let me see if I can. Okay. So for daily, you can estimate with 30. For weekly, you use 4. For monthly, you use 1. So this will be 2. And this is going to affect all my calculations going forward. Okay. So now that you have your what's it called now? Now that you have your pattern, yeah, what are we going to be doing with that pattern? We understand what our sales pattern is, yeah, what our estimates for the units we want to sell, yeah, what it is. Now, if pardon me, I'm a Christian, I'm going to make an example. The Bible says that there's nobody that will build a house without first sitting down and calculating the cost. So you know, you have in your mind, okay, I'm going to sell 100 items. Now, for you to be able to sell 100 items, you agree with me that you have to have 100 items available.
Yes.
So that brings us to expense budgeting. Yeah. So the first thing we're going to do to be able to budget for our expense is we want to be able to list all the same items that we say we want to sell. Yeah. In this case, our shoe, our bag, and our jewelry. We want to list them out. Then we want to ask ourselves, each of these items, how much does each one cost? Yeah. So for a service business, you probably might not have a direct cost. It is important you obviously you are using your brain. What you have is overhead cost. So we'll get there. I hope I can get there. But yeah, what you have is overhead cost. But for a retail business, for example, you have what you call direct cost. So let me just throw a little bit light on what direct costs are. Direct costs are costs, yeah, that are directly related to the goods or service that you're rendering. So for example, if you are selling a mouse, right? If you are selling a mouse and you buy this mouse 50,000 naira, but you're selling it for 80,000, 100,000, 150,000, the 50,000 naira which you bought it from wherever you are buying it from, that is your direct cost. So whatever happens, yeah, it is common sense. You don't even need to be an accountant to know that you should not sell below this cost. You're laughing. You don't need an accountant. You don't need to be an Igbo person to know that you cannot sell below this cost. Even those people that used to tell you we are doing 50% splash sale, they have done their mathematics. Even with that 50% splash, they are not selling below their cost price. You understand? That is the reason why everybody is shooting up prices. You'll be wondering that, like a friend, my neighbor was telling me the other day that he bought a car for, that he has a Corolla, which he bought for 1.8 million naira, I think in 2019 also, and sold it which day here for 3 million naira. So, first of all, it does not make sense in accounting that after using something, how many years he's selling and making profit. But what I'm just trying to say is you should not sell below your cost price. Yeah. That is basic, it's just basic accounting, it's basic common sense. It's not even accounting at this point. So you need to be able to understand what your direct cost for offering that service or selling that item is. Now the challenge then becomes adding your overhead. Now overhead could be your rent, because you will not sell one mouse and recover your rent from one mouse. Let's say your rent is 1 million naira. So how do you now split your overhead to make sure that for each item that you're selling for your business, you're making a portion of your overhead and also making profits? Yeah. So that is why we're actually here today. That is, if you understand that simple mathematics, you will be able to plan your business effortlessly, and you see that you'll be making profits. Yeah, my goal is for you to make profit after today. No more selling at loss. You should be able to price your business and make profits. You understand? So back to example of the Nigerian economy. The reason why you see that you go to a store today and buy something, and the next day you go, the price has changed. It's not because the person went to the market to buy that thing. It's because they know that by the time they are going to buy that thing, the direct cost has increased. So they want to be able to still sell so that they can see something else to buy tomorrow and resell. You understand? So it's just basic economics. You don't want to sell below your direct cost. In that case, you probably say the cost of repurchase, yeah, for lack of a better word. So that is it. You want to be able to sell and make what? A profit. Okay? So let's continue. Now that we understand that, what our direct cost is simply is the cost that is directly associated with the item. Yeah. Now, the next thing is you want to now determine what you want to now bring your units. So the units are basically these ones that we've determined. We know what our estimated units, yeah, are. What's the estimated unit you want to sell at the end of the month? We already know that. You want to sell 450, you want to sell 20, you want to sell 2, yeah. So since we know all of those, we now bring them here. Okay, it's like we'll be doing this mathematics together. I don't know if I was high when I was doing this thing, but it's all right. Okay. Don't worry, this is as a result of procrastination. I did not have time to revise this thing. Okay. So let's say you understand what your direct cost is.
Yes.
Now, the next thing you probably want to understand is your overhead cost. Now, what I did here, I just said, okay, overhead cost is 100,000 naira. This is quite low. Let's take it to 1 million. Yeah. So let's say your monthly overhead cost is 1 million naira. This covers your rent. So for rent, for instance, in Nigeria, we pay rent on an annual basis. So let's say if your rent is 1.2 million naira, you want to divide it by 12, and you get 200,000, right? You say, okay, your monthly estimate for rent is 200,000 naira. If you are paying yourself a salary, which you should, you say, okay, I'm paying myself a salary. I don't know how much is the minimum salary you can pay in this economy, but whatever it is, let's say maybe 300,000, 400,000, 100,000, depending on the size of your business. Yeah, it could be a million naira, whichever one you decide to pay yourself. But because we're working with an overhead of 1 million, let's say your salaries, you're paying yourself, let's say you're paying yourself 300,000 naira. That is plus your rent, that's 500,000 already. So let's say you have 1 or 2 staff, or depending on the number of staff strength that you have. Let's say you're paying other people another extra 200,000 naira. Yeah, which is now 700,000 naira. Then you have your utilities, your NEPA bill, you have Facebook adverts, and all of those things that you're paying in your business. General overhead, let's say all of those miscellaneous accounts for under 300,000 naira, which is the 1 million naira. Now, what you have to do now, what you need to do now is not tell yourself, now, if my total overhead, yeah, is 1 million naira, yeah, and I know that I will be selling a total of 450 plus 20, that's 470, 472. So I'll be selling a total of 472 units in a month. Ibad as Ibad, this is the amount of items I will be selling in a month. That is what you're doing budgeting. Like I said, if you remember, I said when you're doing budgeting, yeah, especially with your units, you want to be conservative. Yeah, you want to be conservative. So when you're doing your estimates, you want to be conservative. So what I'm going to do is, we have 472, right? So we want to divide 472, we want to divide 1 million naira by 472 so that we can know how much each of these items should be contributing to our sales on a daily basis. So let's do that.
That's 2,118.
How much?
2,118.
2,118. I don't know if people plan to come and do math today. Sorry.
Yeah, business owners. Mathematics must be our core. So that the account can be balanced.
So I just want to show you simple steps on how you can do your accounting. Excuse me. I'm trying to approve a transaction.
So what are we adding up?
No, I was just trying to approve a transaction. Okay. So now our overhead, yeah, is 1 million naira.
Yes.
And the amount of units we're estimating to sell is 472. So because we know we want to sell 472, we would not divide 1 million naira by 472, which means for each unit of item we want to sell, we have an overhead added of 118 naira.
Okay.
Now, if for instance now we want to sell shoe, the total cost of our shoe would not be 5,000 plus 218. So please let me add 5,000 plus 218.
7,118.
7,118, right?
Yes.
And this will be 12,118.
118. And that would be 17,118.
So this is how to be able to put that overhead. So as you know that now before now I said you cannot sell below your direct cost.
Yes.
But you are not how would I put it now? You are not somebody that is doing business without an overhead. You are paying yourself salary. So assuming that maybe you are just let me say you are in your father's house, you don't pay rent, you don't pay internet subscription, you eat free food, you basically have no overhead. Yeah, you can use this as your main cost. Yeah, this first column here, you can use this as your main cost and start adding your margin to make profit. Well, you have overhead, and your overhead, you know, whether you sell or you not sell, you incur a 1 million naira cost.
Mm.
So we have to figure out how we can get our 1 million naira back first before we start talking about profits. That's what we're doing. That is why we now said, okay, every month we can sell 472 units of the products we are selling. This market that we are selling, we can sell 472 of it. Now this 472, I will not divide it by, I will not divide 1 million with the 472 and get 2,118, which is now your overhead cost. So if you like, you don't meet this, what's it called, 400 and this thing, that means wahala dey. This is why you need to plan. You need to know what the numbers are saying. If for instance now all you are able to sell in a month is 100, it simply means for each item you are incurring a cost of like 10,000 naira on overhead. So the average amount you sell in units we determine is directly proportional, like they used to tell us in those days. So your overhead costs. I hope the English is not too big. I'm trying to come down to our level.
Yeah, I don't think so. Please, if you are lost, can you raise up your hand or can you unmute your mic and let him know? But if you are following, let's give thumbs up. If you are following, let's give thumbs up. Okay, thank you.
Okay, so basically, that is what we are trying to understand. We need to know what our overhead is, because overhead is the reason why most people make losses in the business, because they know for a fact that if I buy for 10 naira, I should not sell below 10 naira. But what they've not been able to figure out is how to now put all those extra expenses, the light that you pay for, the salary that you are paying, all of those extra expenses, they have to now add it to the business and add it to your cost. So this is simply how you do it. You make an estimate. This is how much I'm paying salaries. This is how much I pay on the monthly utility. This is how much my monthly rent should estimate to. All of these things, you list all of your overhead expenses one by one and have a total. Then you divide it by how many units you think you can sell. You are confident you can sell. You need to be able to have a reasonable number. You think you can say bad as bad, yeah? And beat that. The moment you beat that number, you know that you are already in profit. You understand? But you want to be able to say, okay, this is how many units of this product I can sell in a month. That is the basis for your financial planning. So once you get that, you divide it and add that overhead cost, so your direct cost, then you have a total cost for each item that you're selling. You get? So basically, yes, once you have that, the next thing we're going to be doing is making a sales budget. Yeah? So let's make a sales budget together. Now, making a sales budget, like you already know, we have our total units already. We have our total cost. Now, making a sales budget is basically simple. You bring your total cost. So I think since this one was wrong, let's copy this. So this is your what's going on? The total cost of your business. Yeah, this is total cost of your business. And you already, okay, so because of my previous calculation, all of these are wrong. Yeah.
To do the multiplication of that now, right?
We can do the multiplication. No, so this is basically on multiplication. So it depends on how, personally, when I advise my clients, because I understand that profit margin, which is this next column, is it varies on different this thing. You probably the brand that you have, the brand you've built. So let's say I'm just starting a business. Yeah, I will not price my business the same way somebody that has been in business for 10 years will price. So when it comes to adding margin on the cost, so what I try to determine for my clients is this cost, what your total cost is. And I tell you, whatever you do, you can't sell below this cost. What you put here, so people can say, okay, I want to do 100% margin. I want to do a 50% margin. I want to do a 20% margin. Or I just want to put numbers. I want to say, okay, in this case, what I just did was put numbers. I want to say, okay, for this item, each time I sell it, I want to make extra 5,400 naira. Or I want to make 20% of it. Whichever way you want to do, I want to make 100% of it, I want to make 200% of it. It depends on the authority that you command in your field, how long you've been in business, your client base, different things determine how you price. I can't tell you that, okay, you should not price above 20% margin, or you should not price above 100% margin. But what I should be able to draw your attention to as your accountant is tell you that this cost you are seeing here, whatever you do, be it Agor points, be it Bonanza, be it whatever, don't sell below it. Because the moment you sell below it, it is charity. There's no other word for it. What you are doing is charity. You understand? So as long as you are not in the charity business, you cannot afford to sell below your cost price. It's simple economics. You understand? Else you would not be making profit. So once you understand what your average order value is for the month, you understand what your overhead is, you divide that your overhead with your average order unit value, you get your overhead cost, then you add a margin of your choice. Yeah, you add a margin of your choice to it. Then that margin, you add it to your cost, then you get your selling price. Now, this selling price, I'm supposed to add an extra column, which is the same unit that you're estimating to sell. If you multiply that those units with your selling price, you now get your sales budget, how much you are looking to make in the month. It's the same thing with your expense. If you multiply your total expense by this unit, you can get an estimate of how much you're looking to spend within the period of the month, how much you should have available if you want your business to flow smoothly, like meet up all your expense obligations, right? So basically, that is how you want to budget. And okay, make expense, make your sales budget, and finally your financial plan. So this is what I was just explaining. The first, I purposely did not do this. I know this is a challenge class, so you people will go and do your own sales budget and submit to coach. Yeah, you want to do your own, you can call it a profit or loss. So you want to look at your business. I purposely did not put a table here, so I just listed what the steps are. Multiply your sales value with the estimated units. So for each of the items you're looking to sell, it is worthy to note that when you're listing items, we all do businesses. There are certain businesses that, or certain items in our shelf or in our business that we are not sure about selling. You do not want to make budgets with all of those items. What you want to be able to make, what you want to make budgets with or make plans with are those things that you're setting. They are called your fast-moving products. So all those other things that in your business, like when I was growing up, yeah, my mom used to sell a store, and especially because she's a civil servant, when she goes to school, I'm the last born, so I'm always at home. I left home last. You saw the children coming all the time to come and disturb us to buy chewing gum, biscuits, and all this. And most times I just want to sleep. I was just watching movies in the parlor. They will just be disturbing me because we have a small garage where the store is. So they come and I'm like, so when they ask my mom, these things that these biscuits and sweets and all this that you're always selling, yeah, they are disturbing. Why can't, because I know that there's no money, because if you buy that time all these sachets of sweets, maybe 100 naira. By the time you sell everything, it's 120. Children like us, by the time we won't pick the one we are picking, you probably be running at a loss. So I'm like, why don't you just stop selling this thing? And she made a statement like, these small things that I'm selling is what will bring these children to my shop. Now, when their parents want to actually buy the big stuff, it's the children they will still sell. And because they're already familiar with my shop, it is here they will still come. So there are certain things that you sell in your business that necessarily do not add to your bottom line, but you're selling it because it's complementary to something else. It will drive the sale of something else. Yeah. So you want to have, so I'm just saying this to say that you probably don't want to add all of those things, those tiny things in your budget. Those things that you know that, okay, this is what is bringing your business money. Yeah. You want to add all of those things in your budget. Those are the things you probably want to focus on. Those are the items you want to focus on. Those are the services you want to focus on. Those are things you probably want to make budget with. Yeah, so that first of all, it will not be too bulky, and the mathematics will not be too complex. Yeah, and it's basically straightforward. And those are the items you want to spread your cost over, because you might not sell the other ones, you might sell those other ones, but the ones that you're sure of, you want to be able to make plans with all of those items. So like I said, for this one, I say multiply your estimated sales value with estimated units. So this is your sales budget. So by the time you get, so what we're saying is, this is your sales value, your selling price. After you've done your mathematics, you get your selling price. You want to multiply this with your estimated sales units. Yeah. That way, you can now say, okay, this is how much. By then you multiply 450 with the 5,000 you are looking to sell your shoe or what have you. You get the total revenue expectations for that month. You do the same thing for bags. You multiply the total units that you are hoping to sell with your sales price that you have. For each of your items, you get your total revenue expectation for each of those items, and you sum it up. That will give you your revenue. Then you come to your expenses, you do the same thing. You multiply the estimate expense value, so which is again your total cost, which is an addition of your direct cost plus your overhead. Yeah, so this value now, you multiply it by this to get what your estimated expense is. Then you simply subtract your expenses from your sales. Remember, we're trying to make a profit. Yeah, the essence of making financial plans is so that there will still be money left at the end of the day. After doing business, you have change, you understand, to be able to pay yourself a salary and do what have you. To be able to grow your business, you should have change left. Yeah, so you want to subtract the expenses from the sales, and voila, you have your projection. So you have those targets. So these targets now you can do a lot with it. You can say, if for instance now, yeah, let's look at this. So this is, like I mentioned, this is the backbone. Yeah, this is the backbone of your estimate, your budget, your planning. Yeah, whatever you do, you want to be able to meet this budget and exceed it if possible. Yeah, because the moment you fall short, it simply means that there's an overhead you have not paid for. Because think about it, like the example I made of the kid, yeah, that does not have any overhead, does not pay rent, does not buy food, does not buy data, does not do it. All the child has to do is just sell the item and make a profit. So you would agree with me that if, for instance, now I don't have any overhead, yeah, I don't spend money on my business whatsoever. Yeah, I only make money when I sell an item. If I don't sell an item, even in a year, I am not making any loss. Because technically, the item is still with me. Yeah, I still have the value of the item. Whenever I sell it, I get my cost back. So what actually makes you make a loss for a business owner is the overhead that you've not been able to account for. Because at the end of the day, as long as you have that particular item still with you, you have not made a profit, you have not made a loss, you are in a break-even state. Yeah, you are in the break-even state. So all of these things we are doing is to be able to account for the overhead of doing business. Because in business, expenses will shall come. You understand? So you want to be able to account for your overhead and make provisions for them even while doing business. That is the core essence of all of these things which we have been speaking since how many minutes ago. Yeah. So you want to be able to make a reasonable budget in terms of the units you want to sell. So when you have a target, it also propels you that, okay, what do I need to do to meet this target? Do I need to run Facebook ads to meet my target? Yeah. Do I need to do influencer marketing? Do I need to give other people my products to help me sell? What do I need to do? Do I need to revisit people I've been selling to before now? What do I need to do to make all of these sales to amount to this particular unit? Yeah. So that is the idea. And okay. And that is the end of my financial planning class. Thank you for coming to my TED Talk.
Thank you so much, sir. Okay, so if you have questions, please just do us to raise up our hands. Okay, thank you for some persons are giving thumbs up. I don't know if you can see it from your screen.
I can see it. So let me even do it.
Okay. So my question, I have a question. If you have questions, please do what to raise up your hand. Now, for the as regards the overhead cost, how do you balance it whereby in a location, maybe the cost of renting a particular store is higher than another location? Yet, if you get to those both customer A, or how do I put it now? Maybe the first person selling, you get to the store, the same high cost of item he or she is selling is what the other person who is having higher cost of rent is selling. How do they balance this thing? How do you balance as a business? Because imagine if in the next location, people start coming and they realize that, oh, the thing this person is selling is so expensive. They'll start going to the one, whereas the overhead cost of maybe in terms of rent and in terms of paying light is cheaper for the person selling here. How do they balance it? Yet you want to sell at the same price every other person selling. How do you balance it?
Okay, so thank you for the question. Let me start doing like all these debates people. Thank you for your question. So first things first, I'll tell you that you're not meant to set your prices based on other people's condition. Like I said, when I mentioned margin, you remember I said people add their margins for different reasons. Now that being said, you mentioned that you probably have people in the same vicinity, neighborhood, yeah, and their overhead cost is different. So this will affect pricing. Now, as a business owner, this is actually where financial planning comes into play. Now, before you do any business or any business you're into, you probably want to do what you call industry research. Yeah, how much do other people actually price this product? Yeah, I'm not saying it should be a benchmark, but you probably want to have an idea. It should be a benchmark if possible. Yeah, if you want to use Apple's this thing, to give you this thing. But you want to say, okay, so if if people sell this, let's say for example, for popular products like Coke, yeah, they sell Coke for 200 naira, and let's say you're selling just Coke. If you're selling just Coke for 200 at 200 naira, you don't want to now in place of you're selling your Coke, you don't want to now incur so much overhead, because overhead, remember, overhead decisions around overhead are what you can control. You can control how much you pay for rent. If you think your rent is too expensive, sell from your house or get a caravan. I don't know if you understand. So that is why. So before you actually say you want to go and make payments for rent, you want to go and pay, you probably want to do your books, yeah, and say, okay, if I were to be paying 5 million naira for rent, for example, what would be my overhead? Now, if for instance now you actually like that place, but other people are selling Coke for cheap, you can decide to brand your shop as a premium shop. Maybe add a sit out, so that when they sit and drink the Coke and it's cold, they can decide to pay 500 instead of 200 naira, and they will see value in it. So those are other strategies you can actually add to your business to ensure that you price at a level where you can sell and be profitable. But if you are doing the common man everyday basic price, yeah, because in this same Lagos, people sell Coke for 200, but as places you go, Coke is 2,000 naira. There are places you go, Coke is 5,000 naira. The overhead is obviously different. You see it. You understand? I go there, I know that when I go there, I make sure I take a picture. There are places I go and buy Coke, I will not take pictures. You understand? So these are the things you probably put in consideration. I strongly believe that when it comes to overhead, the decisions around overhead cost are business decisions. You decide how much your rent should be. You understand? You decide how much salary should be. If okay, maybe you might not be able to control things like utility, yeah, but at least you have an idea. You get control the area that you are opening your business. You should all of this information you have, or you can have a reasonable estimate even before starting. Then you can do your costing. That okay, how much overhead would this add to my business if I'm selling so amount of units per month, per day, and what have you. So I hope that answers your question.
Yes, yes. Thank you very much. Mrs. Abimbola, please go ahead and ask your question.
I really enjoy your lecture about financial planning and budgets. My question is, in this situation that we find ourselves in Nigeria, how can I reduce expenditure, overhead costs in a business? Thank you.
It's necessary to ask, please.
I'm not sure Tinubu has an answer, but let me try. First of all, like I said, overhead, yeah, looking at the example I made, overhead is directly proportional to the amount of units that you sell. So first things first, can you increase the number of sales? You might increase your ad budget. Yeah, you might increase your salary budget. And basically, you might have to probably get a physical store or even incur more overhead in trying to increase your sales. But if there's a way you can do it without increasing your overhead, then fine and good. But first things first, to reduce your overhead cost. So imagine that you are selling 1 million units a month. It simply means that every item just has an overhead of 1 naira. I don't know if that makes sense. That's what it simply means. So the more units you sell, your overhead reduces. The less units you sell, your overhead increases. So when you have your overhead total, you want to look at this, your overhead line item by line item. Should you reduce salaries? Yeah? Should you reduce salaries? What else can you cut off that will not affect your bottom line? Should you pack off from that expensive shop and go to or start selling only online. This is one mistake that what do you call that? People who probably do business online, they make when they are trying to transition to physical locations. They don't make provision for things like rent, things like utility. Because the moment you leave your house, that probably maybe as a housewife, your husband is paying rent, and you're not adding rent to your goods, and your goods are cheap, but buying the child of, that person won't ship. The reason they are cheap is because you've not added rent. The moment you add rent, that thing will go up. You understand? You've not added rent and some other things, transportation to the office every day. Those are overhead that you have to make if you want to actually sell and make a profit. Unless you are doing charity and you are doing let me share come for house kind of business, it's fine. It's personal decision. But if you're doing to make a profit, before you say you want to go and rent, you want to move from an online store to a physical store somewhere, you want to say, what are the implications for this decision I'm about to make? Can my sales cover my overhead? Will I need to increase prices? Will moving to a physical store increase my sales in numbers? Those are questions you probably want to ask and do research on. So for your question of reducing your expense, like I said, direct costs, there's nothing you can do about it. You probably cannot reduce that one. The only one you probably have hands over is your overhead. Now, one way to do that is to increase your unit of sales. It will reduce your overhead cost, or look at your overhead and justify each of those expenses. You want to be critical with your expenses. Do I need to pay this? Can I postpone these expenses? That's where scale of preference comes in. What do I need to do away with, and what should I keep? Yeah, and I'm sure the Lord will direct you on what to do. Hallelujah.
Amen.
Wow.
Amen.
Okay, but now how can we reduce the impact of this rapid rise in dollar? Like, it's not funny. The first person talked about it. Yes, you've talked about overhead cost, but did you have, from your experience as a professional accountant and all of that,
nobody has experience in this economy? It's new.
Everybody wakes up the next morning, you're hearing dollar is already. Well, I'm sure maybe before the end of the week or before the end of the month, we could be hearing that dollar is 2,000 naira to $1. We never can tell. So how do we cushion this effect? Do you have something to, like, how do we cushion the effect? It's really a concern point. We are all entrepreneurs here, and it's a big concern for us.
So first of all, nobody has experience in Nigerian economy right now. They did not teach us in school. They did not teach us this one. What is going on in Nigeria right now? I can tell you for free. Nobody taught us. That being said, going back to our expense budget, now, what you said now is directly related to your, should I say, most times, maybe you are buying items to resell. You buy today at 5,000. Before you come back tomorrow, they say the price has gone to 10,000. The only thing, looking at the trend in the market, the only thing you probably want to do is increase the buffer you have on your 5,000. So let's say, for instance, I was looking at this one as an example. So if your direct cost for an item is 5,000 naira, that is why you see that most people what people are just doing right now is they're just doubling prices. Because nobody can actually say what will happen tomorrow. You will go to the market now and see that what you bought before has doubled price. Everybody is not accounting mathematical as just, people are just doubling prices so that they can be able to buy the item again or buy other goods and services that other people are increasing. So it's just a panic price increase. Everybody is increasing their own to be able to meet up with other people's demand and supply. So I think that is the strategy all of us we shall adopt. If the direct cost is 5,000, yeah, because if we sell it now, we have to buy it back, Abi.
Yes.
So what you have to just do is add your buffer. So you can just maybe have another column and times your direct cost by 2 or by 0.5. That's half of it. Whichever buffer you think that, depending on how the price increase in your industry is, yeah, you want to add a buffer before you not talk about overhead.
Thank you. It is well. Wow, that's well. Okay, Mr. Dekule, please go ahead and ask your question. That would be our last question. Yes, please go ahead, sir.
Good evening.
Good evening, sir.
Good evening. Though I joined late, but I have a question in mind ever since I saw that topic.
Okay.
What model will you give to a startup who wanted to prepare an overhead cost for his business? Number one. Number two, is staff salary part of what we should consider as overhead cost as a startup?
Okay, so like I said, it's financial planning, right? And even startups, I want to believe that they are starting to make a profit. Now, while it's in reality, realistically speaking, startups, the best they can do is budget without actual historical numbers. Yeah, because for most startups I've actually witnessed, most times, especially unless maybe you're in the service business where you are working with your brain and maybe MTN data that is not so much expensive, and by the time you make 1 or 2 sales, you can use 1 sale to cover all your expenses in a month. If you are into maybe the retail business and all of that, because people have not known you well enough, you probably might not have enough. So it says, it goes to say that maybe in the first few months while you're starting your business, you might take a hit. Yeah. So, but talking about what price of what model of planning, financial planning you use, is basically the same thing. You want to have targets for yourself, because if you don't have targets, you can't even tell if you're making a progress or not. Yeah, you can't tell if you're making a progress or not. So you want to be able to tell yourself, okay, I'm a startup. I'm starting on the 1st of January. For the first month, how many units of these items that I have in stock I want to sell? Yeah. So another thing is, if you want to even minimize your, so it depends on the different strategy. You can do what the people call affiliate marketing. You might not have the product. I think a lot of people on WhatsApp business do now. They'll just be uploading products. When you order for it, they'll go and buy it and give to you. So they ask the vendor, how much is it? The person tells them, they add their own profit on top. So it depends on the business you're in, what your strategy is. If it's business that you need to have the things readily available, you want to say, okay, this thing I'm having available, what does it take me to actually sell it? So the question is, I want to sell 1,000 units of this thing. What does it take me to sell 1,000 units? That is why you're doing all of these expenses. Your direct cost, obviously, for whatever you're selling. Your overhead costs. So do you need to run ads to sell 1,000 units? Yeah. To sell 1,000 units, do you need staff in the first place, or can you do it yourself first? You're trying to minimize cost. Yeah. Maybe as the business grows and you get more sales, you cannot employ people to help. So it depends on what the strategy is. Yeah. But at the end of the day, you want to be able to put all of these things on the ground. Yeah. And make decisions with them. So by the time you spell out all the possible expenses, you can now say, okay, no, hiring a staff can wait. Getting a shop can wait. Running adverts can wait. Let me use word of mouth, or let me use flyers first. So whatever it is, yeah, when you put when you put numbers to all of these actions that you're about to take, it will give you a clearer picture of what you're supposed to do. Yeah, in relation to the sales you're expecting. You don't just make expense plan without a sale backing it up. I always tell people, have a sales target in mind. So the sales target you have should not guide you on your expense, because whatever expense you are making that will not help you achieve your sales objective is not necessary. You get? So that is simply it for startup. It is not necessary. So do you need staff? Yes or no? Will the staff enable you sell 1,000 copies or 1,000 or whatever you're selling? If the answer is yes, then get a staff so that you can meet your sales target. But if those expenses do not help your bottom line, let's wait till another day. Then for your question of salaries, are salaries part of overhead? Obviously, they are part of overhead. Any expense that is not directly related to the the sale or the item you're selling, the service you're selling. Even some services have direct overhead. Yeah, you can be selling a software and the software has a cost that you're buying it from whoever designed it or has it. That's a direct cost. You understand? So whatever it is, yeah, if it is not a direct cost to the item, every other expense is an overhead.
Thank you very much, sir. So please, how do people reach out to you? You
Hello?
offer auditing services and all of that.
Okay,
So how do people reach out to you?
advertise my business? Let me advertise my business. I said I did not advertise my business.
So please, sir, please let people know how they can contact you. Yes. For their audit, for their business audit.
Can I ask a question while I look for my Instagram page?
You said what?
I heard somebody wanted to ask a question or something.
Yes, I still want to ask a question.
Oh, okay, Mr. Dekle.
I want to ask, is it advisable to outsource the salary when you really actualize that you need to start with the staff for these things to push? Is it really advisable to look for finance to cover the staff salary, maybe at an interest rate or some sort?
So, like, when I started, I said, realistically speaking, yeah.
Do you understand?
Yeah, I understand the question. So you're saying you have a startup, yeah, and probably the funds you have available is not enough to probably pay things like salaries, or not just salaries, any overhead, speaking in general. Yeah, but the future is bright. You understand? And that is basically the case for most businesses. That is just the truth. No business, there are very few business, like I said, maybe just service business that you can start at month one, you're making profit. So in my how many years of business doing this work, I've seen financial statements and I've seen a lot. It's beside the only exceptions are probably at their service business. But most likely, somebody said Amazon was making a loss for about 5 or 10 years. All the motivational speakers. I don't know about that, but those are the realities. Now that is where, even when you are registering your business, there's what we call owner's contribution, which is shareholding. Because even people know that you have to put money in first before you get something out. So those are basically investments. So you can say you are starting a business and you do a forecast. Yeah, this is what you're looking to sell. For instance, you're looking to sell maybe let's say you're selling Coca-Cola, for example, and you're looking to sell 10,000 crates within the next 6 months. Yeah, so even be able to break even or what not. Now for those first 6 months, what are the expenses you might have to incur for the business to be up and running, to be standard, to be able to actually deliver this service? Yeah, somebody has to load the trucks. Somebody has to sit down and record sales. Somebody has to attend to customers' queries and complaints. You have to actually pay people, spend this money even before making it. So you want to make a projection that, okay, how much investment do I need to put up front, or how much this business require me? Sometimes you might not have all of this money. Yeah, like you said, if you say you might take a loan, but you want to make a provision and say business is a risk.
That is class.
You get, business is basically a risk. So you want to say, okay, with these projections I've done, how soon, if I have a steady inflow of sales and all of that, how soon will I be able to break even, and how soon will I be able to afford staff and all of that? If I have to start with the staff, what is the cost implication? I need this money. So it depends on the business you're going to. I will not say don't go and borrow. Obviously, if your business has to probably borrow to survive for a while, and when cash start coming in terms of sales and all of that, then you can repay your loan. It's people do it. Dangote still borrows tomorrow, even plus all the money when he gets. So it's part of the business. It's risky. You borrow, you make these expenses, but you want to make sure that, like I said, your estimates are conservative, something that is attainable, so that you don't make those kind of motivational speeches, kind of estimates, and you find yourself drowning where people use one egg to give poetry. No, those are the kind of estimates we're talking about. You understand? You want to be realistic with these things so that you don't get overwhelmed or disappointed at the end of the day.
Thank you so much, sir. Mr. Adepin, I'm sure he has answered your question. Or
yes.
has he answered your question? Okay.
Yes, I'm okay.
Okay, great. So, sir, please, can you let us know how we can reach out to you? We need your auditing services. We need you to look into our business, our accounts, and all of that. Please let us know how we can reach out to you.
Okay.
Network.
Okay, so this is my page on Instagram at Accounts and Data. So you can just, this is my WhatsApp number here. You can just send me a message, just beat me basically. Yeah, this is my page on Instagram at Accounts and Data. And I also give free advice, accounting tips on a day-to-day basis. So you can reach me via the DM here, or send me a WhatsApp message, and I'll be happy to help. Yeah, so I hope I'm expecting some follows tonight. Yeah, so that's the easiest way to actually reach me. Yeah, I check my messages regularly.
Okay,
I like
please do well to send me your Instagram handle link so that I can send it to the group.
Okay.
So they can follow you after the meeting. I'll send it to the group and follow you. Okay, so let's say a very big thank you to our speaker, Mr. Mena. I know some of us doing the mathematics might have looked like, what's this? But it's what we have to do as business owners. So let's unmute our mic and let's say a big thank you. Okay, people are dropping the comment section. Thanks, thank you. Thank you.
God bless you. Thank you.
Thank you.
Okay, so bye, sir. You have a wonderful evening. Okay, so good night, sir.
Good night.
Yes, sir. Okay, so wonderful people, amazing entrepreneurs. Thank you for waiting to this moment. So you can do what to reach out to. You need someone to look into your account. You can do what to reach out to him. And I'm sure we got value today. Some people were left during the meeting. I don't know, maybe network. I also had network challenge from my end. Probably that's why they left. But notwithstanding, we still continue. Our 21 days challenge is still ongoing. We're also having another speaker tomorrow, and he's going to be addressing us on the impact of HR in our business. Yes, you might have said, oh, we've had in the first session, we had someone come to talk to us about employees and all of that. But this person will be coming from another angle, and you don't want to miss out. Having ensuring that the HR department of your business is sound. I'm sure nobody's planning to remain small in their business, even though currently your business might be at the stage of starting out, maybe at the startup stage, or you're still trying to gather. You need to even know what it is like to when you want to establish big time, when you want to expand, the importance of HR in your business. So do what to join me tomorrow, and on Thursday, by God's grace, between the hours of 11 a.m. to 1 p.m., we'll be having a marketing and sales class with me. Yes, so do what to look forward to it on Thursday. As usual, my name is Tommy, the brand and the business expert. When it comes to having many customers in your business, when it comes to increasing sales in your business, I am using digital marketing services and using promotional videos. I am your go-to person. And when it comes to drifting from manual processes of doing things in your business to automating things and ensuring that you are more productive and time effective in your business, I am the right person you should reach out to. And my team and I are ready to help you out with your social media management. So do want to reach out to us. Let's know where you need us to come in. We'll surely send you the price quotation. It's very, very affordable. very, very affordable. Our minimum price is 25,000 naira per month. So you see, it's very affordable. Yes. So do want to reach out to us. We are ready to offer our best service to you. So at this junction, I'm going to say good night. So do have a wonderful night rest.